The year is 2025. Financial tremors are shaking global markets. The U.S. Treasury rates skyrocket. These might sound like excerpts from a dramatic financial novel, but according to Simon Hunt, these events are not just probable, but impending. In today's Financial Literacy Deep Dive, we're going to explore the eye-opening predictions of esteemed economist Simon Hunt for the year 2025. With a remarkable resume spanning business interactions from Dubai to Chile, Hunt brings forth a multifaceted perspective on global financial ebbs and flows. Hunt's track record isn't just based on speculation. His experience stems from diverse business interactions across continents. But what exactly is he forecasting? For starters, he presents a chilling correlation between geopolitical tensions and economic fluctuations. According to him, we're in the midst of a silent World War III. Not just the visible conflicts, such as the ongoing Russia-Ukraine situation, but deeper, invisible economic wars fought behind the curtains of global politics. Interestingly, these wars are deeply entwined with economic policies. Hunt believes the Federal Reserve, a crucial economic influencer, will soon pivot their stance due to these international pressures. Their current approach, quantitative tightening, may soon reverse, leading to a flood of liquidity in the market. What's the potential outcome? A swift surge in stocks. For those passionate about investing, this may seem like a golden period. However, hold on to that thought, because what follows might be the financial equivalent of an ice-cold shower. Are you finding this insightful? If so, remember to hit that subscribe button for more in-depth financial breakdowns. Hunt's narrative doesn't end with this financial euphoria. He forecasts that while stock values may see unparalleled growth, reaching possibly around 6,000 points, the ensuing years could witness a financial avalanche, reminiscent of the devastating 1929 market crash. This isn't just about stock values dipping. It hints at a larger depression, one that engulfs the entire global financial ecosystem. However, the market's tumultuous journey isn't the only concern. The mighty US dollar, according to Hunt, is on a gradual decline. Continuous devaluation through excessive money printing could see its purchasing power plummet. Reflect on this. A dollar from 1980 is equivalent to just a mere quarter today. But the dollar's decline isn't an isolated event. Inflation, which has been a subtle creeper post-2020, is on the verge of exploding, believes Hunt. He hints at a future where inflation could even surpass the 13.5% peak of 1980. With U.S. Treasuries projected to reach about 11%, the stage is set for financial chaos. Meanwhile, on the environmental front, the ominous Gleesburg cycle threatens the U.S. Midwest, a crucial agricultural hub. If Hunt's predictions hold, the U.S. could face a drought reminiscent of the Dust Bowl of the 1930s, causing food prices to skyrocket. To condense Hunt's perspective, we might be on the brink of an economic rerun of the Great Depression come 2025. A potent mix of towering inflation, surging food costs, fluctuating stock markets, and the looming Gleesburg cycle could shake the financial world. Financial Literacy's analysis on a global prediction for 2025. There's something intriguing about predictions. We all want a glimpse into the future, don't we? Today, we're going to discuss a bold prediction made by Simon Hunt, a British economist with extensive international experience on the fate of the global economy by 2025. So buckle up and let's journey into the world of economics, stocks, and the intricate dance of global events. Simon Hunt believes that around the tail end of 2024 and the dawn of 2025, we might witness a significant turbulence in the 10-year U.S. Treasuries. Simultaneously, tensions on the global front may escalate, eventually leading us into a depression reminiscent of the early 20th century's darkest economic days. Now, what makes Simon Hunt an interesting figure in the vast sea of economists? For one, his global perspective. Having done business in continents from Asia to Africa, Hunt possesses a vantage point that few can claim. His global interactions give him a unique lens through which he foresees a storm brewing, capable of disrupting the economic prosperity of the past decade. Before we delve into the specifics, let's understand the backdrop. A conflict, which Hunt likens to a world war, isn't merely restricted to one region or country. Various global powerhouses are intricately involved, each supporting their chosen nation. But you might ask, how does global strife impact our day-to-day economics? To answer that, we need to understand the role of the Federal Reserve, a cornerstone of the American economy. The Federal Reserve, or the Fed as it's often called, continually assesses its policies based on current events, including conflicts. Currently, the Fed is undergoing a process called quantitative tightening, essentially pulling money out of circulation. Hunt believes this policy will reverse soon, not just due to geopolitical tensions, but also due to accidents or unforeseen mishaps in the financial realm. If you're wondering how this relates to your personal finance or investments, here's the chain of events. The Federal Reserve might revert its current policy, pushing more money into the system rather than extracting it. As a result, stocks could surge, reaching unparalleled heights by 2025, largely due to this excess liquidity. For instance, imagine the S&P 500 doubling its current value. However, this boom might be short-lived. Hunt anticipates a severe depression around 2025 that could disrupt not just economies but stock markets globally. It's like a high-paced roller coaster. First, a steep rise and then a dramatic fall. For the everyday investor, Hunt's projection presents a quandary. Do you capitalize on the predicted stock market surge or play it safe, anticipating the subsequent decline? Warren Buffett, the Oracle of Omaha, often advocates for long-term investments, avoiding market speculation. But if Hunt's prophecy turns true, then timing the market might yield substantial returns. Moreover, Hunt's predictions aren't limited to stocks. The US dollar, the world's primary reserve currency, might see fluctuations. Due to the continuous printing of money, he foresees its value deteriorating over time. This depreciation makes it less attractive for global investors, who might turn to more stable currencies. Furthermore, he anticipates inflation, which has shown a modest increase since 2020 to spike dramatically, with the US Consumer Price Index potentially surpassing its 1980 peak. Simon Hunt's prediction paints a scenario of extreme highs followed by drastic lows. While some might dismiss his forecast as overly pessimistic, it's essential to remember his unique global experience, offering him insights few possess. One can't discuss economic forecasts without examining the roots of such predictions. A forecast isn't merely a whimsical projection. It's rooted in tangible data, market behavior, and intricate patterns recognized over years of research. Simon Hunt, in his prediction for 2025, isn't pulling facts out of thin air. Instead, he's drawing upon years of international economic observation, adding credibility to his claims. It's also worth noting that economies are in a perpetual state of flux. The interplay of demand and supply, political events, technological advancements, and even the changing climate play roles in determining an economy's direction. Hunt's prediction, however significant, is one perspective in this vast tapestry of economic theory and practice. Now let's consider the implications for developing countries. If Hunt's prediction rings true, and the world's largest economies are sent spiraling into a depression, the ripple effect on smaller developing nations cannot be ignored. Many of these countries are deeply intertwined with larger economies, dependent on exports, imports, and foreign direct investments. An economic downturn in a major nation, say the US, could have domino effects, leading to potential economic stagnation in dependent countries. This emphasizes the interconnected nature of our global financial landscape. Moreover, for the average citizen, the anticipated financial turmoil may seem overwhelming. Yet, there lies an opportunity within this prediction. Awareness of potential economic shifts allows individuals to make informed decisions. For those with investments, perhaps it's time to diversify, leaning into more stable assets like precious metals or real estate, which historically have weathered economic storms with resilience. Furthermore, an area Hunt touches upon but deserves more focus is technology. With the rapid advancements in fintech, blockchain, and cryptocurrency, how might these sectors react to Hunt's predicted economic landscape? Cryptocurrencies, for instance, have been lauded for their decentralized nature, making them seemingly immune to traditional economic downturns. Yet their volatility and the uncharted nature of their long-term behavior in global recessions remain subjects of debate. In wrapping up our extended analysis, it's vital to remember that predictions, no matter how rooted in research and observation, remain just that: predictions. The future, with its myriad variables, is unpredictable. Simon Hunt offers a lens, a perspective, but as history has shown us, economies have a unique way of surprising even the most seasoned experts. Remember, The best strategy in the face of uncertainty is to be educated, diversified in your investments, and always prepared for various economic outcomes. Subscribe to Financial Literacy for more insights and actionable advice to empower your financial decisions.